Hey Reluctant Preppers, this is showing you just how easy it is to purchase silver without paying any premium over spot price. You just go to sdbullion.com/rp, scroll down and enter the special code to get silver without any premium, and they'll mail it to your mailbox, discreetly packaged. Inside you'll find a beautiful 10-ounce bar of fine silver, and you are able to purchase that and have it and add it to your stack and your collection without paying any premium. And you're supporting Reluctant Preppers along the way. Thanks.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. It's always a privilege to have this guest on. He is a proprietary metals and market analyst, Rob Kirby, founder and host of KirbyAnalytics.com. He's here with us again on Reluctant Preppers, both to answer questions we have as well as a number of viewer questions which you have submitted. Rob, thank you for joining us once again on Reluctant Preppers.
Pleasure to be with you again, Dunnigan.
Could we kick it off with a mystery that's sticking in a lot of people's craw these days, and that is, where is the missing money? And we had talked about that just briefly before the show. And if you could get us into the size and the scope and scale of this dilemma, and what it means to the average person, and what it means to the meaning of the statistics that we hear from the government on as far as how we're doing financially as a country.
Well, recently we've had a very brave soul come forward. He's a PhD in economics. He occupies a very prestigious chair at Michigan State University, and his name is Dr. Mark Skidmore. And he and his research team have shown that there's effectively $21 trillion in missing money between the years 1998 and 2015. And Mr. Skidmore has been doing work with Catherine Austin Fitts, showing that there's effectively $21 trillion that's gone missing from the Department of Defense and HUD, Housing and Urban Development, with the vast majority of that being Department of Defense. So my question is, we know for a fact that this money was created. So my question is, the military doesn't know where the money is, or can't account for what they've done with it. So my question is, where is that money? And this is from a very broad perspective. This missing money, or this 21 trillion that no one knows where it is, this is what I refer to as dark money. This is the kind of money that ends up in places like the Exchange Stabilization Fund, a secretive arm of the U.S. Treasury that doesn't really I shouldn't say isn't really. They are not accountable to anyone. They were created in 1934. They're operated by the Secretary of the Treasury, and they're involved in everything from you name it. And what they do, by the way, is considered a matter of national security, and therefore anything they do is basically not reported. They operate above all laws, foreign and domestic, and these people are virtually accountable to nobody. They use the U.S. military and the U.S. intelligence establishment as their, let's just say, their hired muscle. And so let's put it this way: if the Exchange Stabilization Fund were engaged in something like regime change in a foreign country, they might want to hire the CIA to put a hit on a foreign leader. And if the people get caught, the people involved get caught, and they're asked to state what they're up to, they just say, you know what, it's all under national security, and I don't have to answer any of your questions, and there's nothing you can do about it. Now that's pretty much what we're dealing with here. This institution was created, and you got to think that with the amount of money missing, there's probably other dark holes where they're stuffing money. But these are the funds that are being used, in my view, Dunnigan. This is why the United States of America has never had a failed bond auction, because this thing is always standing behind the auction process. If there aren't enough foreign bids to soak up the amount of bonds being auctioned, these guys step in and they just buy them. And they buy them, and they'll buy them from an account in a foreign land, and they'll say it's Irish buying, or they'll say it's the Bahamas buying, or they'll say it's hedge funds, Mickey Mouse hedge fund buying. And but you see, the big thing is we know the money's been created. And this goes a long way to also explaining, and this is a little bit long-winded, but I want to make this point, because in years gone by, when I've said that our monetary system is coming apart at the seams, and I've stated that this ultimately will end at a hyperinflation, I've had a lot of learned people say to me time after time after time, Rob, your idea, it doesn't hold water in one way, because where's all the money going to come from for this hyperinflation you speak of? Well, folks, the money's already been created, and it's hiding in dark pools, and people like Dr. Skidmore and Catherine Austin Fitts are identifying that the money has been created. It's documented that it's been created, so the money's already in existence. And my question back to these learned individuals who think we're going to have a deflationary collapse, what do you think these clowns, these thieves who have stolen this money and who are operating the levers of the dark pools where this money is sitting, what do you think they're gonna do when they think that money's gonna turn to confetti? Well, I think one of the first courses of action, they'll probably buy all the physical precious metal they can get their hands on, and they'll probably go out and buy anything else that they believe will have purchasing power going forward, like the cryptocurrencies. Isn't it odd that we've seen the cryptocurrencies go absolutely bananas in the last few months? And I go, I wonder what that's all about. I wonder if the people who are sitting on all these tens of trillions of dark money that's been created, that's been in hiding, I wonder if they maybe are starting to get an itchy trigger finger, thinking that this money might not be worth all that much in the very near future. Sure reeks of that to me.
There's a related question, as long as we're wading into the waters about cryptocurrencies and government relation to them. This question comes from Jeffrey Morris on our channels. Says, Rob, what triggers may cause governments within nation states to implement regulation of cryptocurrency ventures? Should gold get tied up with crypto and blockchain in a big way? And how might this hookup develop to the advantage or disadvantage of investors? Well, there's actually 4 different questions here, so we can pick these off one at a time, but I'll just hit them all. A number of former prominent gold bugs and commentators have ditched gold for Bitcoin. Is gold on the verge of relegation to antique status within the monetary history of the G7? So again, starting out with what triggers would cause governments within nation states to implement regulation of cryptocurrency?
Well, I think governments might very well try to regulate cryptocurrencies, but I believe that these efforts will end in abject failure, because the real beauty and the real drawing card of a distributed, decentralized monetary regime like a Bitcoin is that it is decentralized and peer-to-peer, and there is no central location that authorities anywhere in the world can go to effectively stop or thwart the exchange of cryptocurrency. Cryptocurrencies trade peer-to-peer around the world, and I mean, short of taking the internet down, there's no way governments can practically regulate cryptocurrencies. So I guess that's my answer to that first question. And any attempt by governments to create their own cryptocurrencies that they control, in my view, will be dogs that will never hunt. Because I want no part of any crypto anything that is centrally controlled by a government.
So that gets a little bit your preference for the decentralization and the independence of precious metals is, I think, related to the second part of the question. Should gold get tied up with crypto and blockchain in a big way, and how might this hookup develop to the advantage or disadvantage of investors?
Well, my understanding is the cryptoization of tangible assets is a process that is already underway. We just haven't seen the widespread results of these activities as yet. But my view is referencing the amount of money that's been fallaciously created by let's just say the keepers of the current world's reserve currency have made it as such that they will never be trusted again to be the stewards of the world's reserve currency, which means we will have a new world's reserve currency. And my best guess is when we get it, it will be something very likely cryptoized, and it will be very likely backed by hard assets. And I put at the front of the line of this new regime that, in my view, is destined to come, at the front of the line, I put gold, silver, as the two foremost tangible assets that will be cryptoized. And I want everyone to understand that when you cryptoize a tangible asset, what you bring to the game by cryptoizing it is transparency in price discovery. And by cryptoizing physical precious metal, gold or silver, what you do is you prevent the shenanigans that go on in places like London and on the COMEX in New York, where the same ounce of gold is sold to 500 different people. And by cryptoizing this, you limit the selling of an ounce of gold for an ounce of gold that's held somewhere in a secure location. And so that's really the difference. And what this cryptoization of metal will ultimately lead to is transparency and honest price discovery, which we currently don't have in the strategic commodities, whether it's gold, whether it's silver, whether it's crude oil. I mean, the paper contracts that are traded absolutely dwarf the physical supplies of these very valuable, finite, strategic commodities.
So I can't resist chiming in on this one. This week we got the announcement, or last week the announcement is that next week they're going to start futures trading on cryptos. So how does that change the game as far as the ability of people to do these huge paper trades against something that they don't really own?
My view is this experiment or this trial that they're going to have with the futures prices of Bitcoin. Let's first preface this little discussion on this topic by saying that what's been proposed is that these futures will be in no manner, shape, or form convertible into actual Bitcoin.
True, settled in cash. Yep. They
will just be settled in cash. The other thing that I see being a huge problem. You see, I don't believe that these things are going to have traction when you can't ultimately even get a Bitcoin by buying a future and settling it. The other huge issue I see with this, the futures markets trade basically in in a North American business hours, and then there's often a Globex session, but let's just say they don't trade on weekends. And I can just imagine a weekend when Bitcoin goes up $2,000 and down maybe $1,000, and then up another 1,000 over a Saturday and a Sunday, and I could see much of Wall Street bleeding from the ears on a Monday morning when they decide to fire up their futures again. I think it's gonna end in abject failure. I think it's gonna cause severe damage to the banking system. And I think this is an example or a case of officialdom, very likely, in their arrogance and their hubris, biting off a little more than they can chew. That's where I think this is headed.
I can't help but asking, isn't it possible? Isn't it possible that it's just refreshing honesty at last? We've had all this futures trading in precious metals that seems to push around the price like a tail pushing around a dog or whatever, and yet we never see the actual conversion or settling in metals really that much for much of the trading. You mentioned 100 to 1. Other people have said 200 to 1 or more than that in trading. This it's a casino set up on the side for doing side bets and not even being in the real game. Yeah,
but there is a subtle difference, or in my view, a very big difference between the metals and this Bitcoin experiment. Let's just say that for all intent and purpose, gold does not trade anywhere during weekend hours. Like the market literally goes comatose or goes to sleep and doesn't get, and we don't see a price for gold until Sunday night when the Far East opens for business. So there's really no institutionally driven or pricing on gold Saturday and Sunday. Or very late night, even on Friday. But you see, Bitcoin trades around the world 24/7, and Bitcoin can move dramatically in a very, very, very short period of time. And I honestly believe that this is going to be extremely problematic. Like, can you imagine the kind of and I don't even know how many underlying Bitcoin a futures contract is proposed to contain. But could you imagine the price of Bitcoin maybe moving $1,500 or $2,000 from late Friday night till Monday morning? Can you imagine the havoc that would create in the to a margin call on Monday morning in the Bitcoin futures pit? I mean, to me this is just a recipe. It's going to cause a massive kill-off. Exterminations. This is anyway. Let's just put it this way, Donovan. It's going to be very interesting to see how this plays out, and I don't see this being able to lasso and corral or tame a truly global market that Bitcoin's become by opening a futures exchange that trades 5 days a week. During business hours. To me, it's a dog that just doesn't hunt.
A few minutes ago, you were talking about the electronic markets and that sort of thing. The complexity and the obscurity and the lack of transparency of that has become so vast and so inscrutable to the ordinary person that many people, especially of the more recent generations, have just basically thrown in the towel. Our parents' generation and ourselves were brought up, you carry the money that you can afford to spend and not anymore. You have people, even financial counselors and planners now telling people, only pay things in cash, that kind of thing. That's the old school, is pay for things in cash, own what you own. Pay for what you own. Then the next generation was, well, at least I'm going to use checking and even online checking and so on, but I'm going to balance my checkbook every month. I'm going to watch every outgo and every income. The next generation, they don't have a checking account, and they pay all their stuff with cards. When the statements come in the mail, they don't even look at them. They have no interest in tracking any of their spending. They assume the system's doing that for them. Here's a question from Warthog, who says, it appears that any form of electronic trading is subject to price manipulation by governments or large banks. As we become more dependent on electronic trading, can any system of trade be validated as genuine by everyday people? Who, if anyone, can ensure there are checks and balances that are working?
Well, and that's why crypto things will have a place in the future, because what the blockchain does is it verifies a proof of work, and this will bring transparency to the price discovery process. You see, the really big thing isn't the electronic trading that's causing the issues per se. What's causing the real big issues, and what's causing the fraud, and what's causing the heavy hand of what looks like government in what used to be markets, is the amount of money, the dark money. It's the 21 trillion that's been created. That's in that a bunch of scumbag globalists have control over. They're the ones that are in the markets controlling things. They're the ones that don't want us to believe that gold and silver are go-to things in times of crisis, in times of monetary crisis. These things what they've tried to do is take the life out of the precious metals by showering these markets with paper contracts representing metal that's never been mined and never will be mined. And what they've done is they've made a complete mockery of the price discovery process. You see, when these futures contracts were first invented, the whole futures game in the mid 1900s came out of the agricultural complex, where farmers who planted crops in the spring and didn't have a harvest until the fall wanted to be able to hedge their final price they were going to receive for their crops when they were harvested in the fall. You see, but what's happened, and that wasn't actually an honorable thing, because what it did is it transferred risk from farmers who didn't want the risk to people on Wall Street who wanted the risk and wanted to manage the risk. But this has all morphed in a very, very sick and dark way, because what we now have is we have players, and I'm going to just keep referring to them as globalists, who have gamed the system. They've gamed the monetary system. They've stolen or created out of thin air through fraudulent means. They've created dark slush funds where they have unthinkable amounts of money squirreled away that they can use to make gold look like it's not desirable. And maybe from a nominal price perspective of the pricing we see, maybe it appears that way, but the reality is precious metal, physical precious metal, has never been in bigger demand, and physical precious metal hoards have been migrating from west to east, from countries that have balance of trade deficits to countries that have balance of trade surpluses. And the sovereign hoards of the eastern countries has been growing at an alarming pace. And I can only suggest to you and state emphatically that the rate of accumulation of physical precious metal in the East and by Eastern nations has got Western central bankers up at night and has them literally crapping their drawers.
Circling back to the last part of that question, talked about gold bugs having ditched gold for Bitcoin, and is gold on the verge of relegation to antique status within the monetary history of the G7?
No, absolutely, emphatically no. Cryptocurrencies are gonna ultimately make gold and silver more relevant than they've ever been.
And that gets back to the transparency that you talked about, and the ability to track ownership, and the ability to fulfill an underlying asset with transparency. There's some other questions here about, all right, this is an interesting one. Your work in the precious metals markets and the industry has a long history, so I really appreciate your weighing in on this one from Broadsword Calling. What, in Rob's estimation, is the silver and gold lowest price per ounce where mining becomes insolvent, and will that drive the mining industry out of business?
Boy, I mean, that's a bit of a tough question to answer because different mining companies have different costs of production. Some deposits are very economical to mine, with a very low price, and some are, become economically feasible at relatively higher prices. So I don't believe there's one price that does all. I'm going to suggest to you, though, that the current prices of both gold and silver leave very little meat on the bone for mining companies to make profits, to allow them to reinvest in their operations, and to give them enough money to go out and look for additional reserves. Just remember that every year that a gold mining company takes gold out of the ground, they're eating into the life of the mine, as expressed by the reserve life of the mine. And the way gold companies continue to operate indefinitely into the future is by reinvesting and going out and exploring, looking for new deposits. And if they don't have sufficient profit coming from existing operations, they just don't have the money to go look for and replace reserves as they're being consumed or mined. So the answer to the question is, we're getting back to sort of, should the price of gold be set by the cost to mine it and make a tiny little profit? I mean, if that were the case, should we apply the same metrics to Microsoft? I mean, how much does it cost to create an additional unit of Windows operating system? My suggestion to you is probably a nickel. So then shouldn't the price of a Windows operating system be 7 cents? It's pretty screwed up logic to think that way. The Windows operating system sells for hundreds and hundreds of dollars, and I mean it's priced relative to what it costs to produce an incremental unit. There's no connection there. But just like the cost to produce, what is the cost to produce a Bitcoin? I heard a very interesting interview by John McAfee yesterday, where he was informing people that he's one of the biggest miners, or the biggest miner of Bitcoin outside of China. He's set up an operation, and he made the comment that he knows exactly what it costs for him to create a Bitcoin, because he mines it. And with all the electricity and the overhead that goes into to him mining Bitcoin, it costs him a little over $1,000 to create a Bitcoin, because that's the sunk cost that he has to spend in electricity, hardware, and management to keep his mining operation afloat. So so if it costs him $1,000 to mine a Bitcoin, and a Bitcoin's trading for $11,700, which it is currently, he's got a pretty handsome profit. But I would suggest to you that his profit margin on a percentage basis isn't nearly as big as the profit margin that Bill Gates gets every time he sells a new copy of a Windows operating system. So I mean, should one be punished and one be rewarded, or not? That's the question. It seems to me that what physical precious metals bring to the table would imply to me that their prices should be dramatically higher than they are today. So I guess I've kind of sort of answered that question about what the price is when, let's put it this way. Some mines have shut down operations with prices where they are. So, and if prices of gold were to go up $500 and silver up $20 or $30, some of these mining operations that have been idled might very well be brought back on stream, and it might cause some encouragement or some optimism in the marketplace for people to go out and look for new deposits. But anyway, it's a long and roundabout answer to the question, but I think we've maybe made some progress on that front.
Yeah, and I'm going to circle back. This one's more philosophical, and I think that's one where you've weighed in increasingly in our visits together. And it's a little bit long, but I think you'll see that it's all consistent here. This is from Without Excuse 2011. Rob, realistically speaking, do you see a way out of this disastrous crime wave we are in? What I mean is they own the financial markets and institutions. They own the legal system. They own the cops. They own the majority vote for most things. They own the media. They own the education system. They own the military and incredible weaponry. And finally, by way of theft and fraud, they own most of the money. Barring divine intervention, can such odds ever be defeated?
Well, what they own all the vestiges of the U.S. dollar centric fiat monetary system. And what I'm going to say is, as stewards of the world's reserve currency, they've done an extremely poor job. And going forward, I do believe I will live to see a day when the U.S. dollar is no longer the world's reserve currency. And I do believe that what replaces it will very likely be something cryptoized, very likely will be something tangible asset backed, and very likely, in my view, just based on my knowledge and beliefs, due to the amount of fiat U.S. money that's been created, without a doubt, the trillions upon trillions that are not even acknowledged to exist by officialdom, this will ultimately cause a hyperinflationary event. And this hyperinflationary event will be very, very, very detrimental to the Western standard of living, and probably more so in America than anywhere else. And this is going to cause a great deal of social upheaval. And these people that we refer to as the powers that be at some point they might very well become hunted, and they will be the powers that were. And this is something that's coming whether we like it or not. And, it's going to be difficult. But you see, what has been done? What has been done to our financial system today is not the sort of thing where people can just put up their hands and go, all right, you got me. I put my hand up, you got me. And, but I'm going to go straight now, and we'll just call it, we'll do a do-over. No, it doesn't work that way. What's been done is so brutally criminal. And you see, the people that have committed these crimes, they're too grand for them to let's just say to give up. Like, they're all in, and because they're all in, they're not going to give up the joystick. Like, it's going to have to be wrestled out of their hands, and the way it's going to be wrestled out of their hand, in my view, ultimately, it's going to be with the complete refutation of the U.S. currency unit. Because once the power that these people have is gained from, and their arrogance and their hubris all stems from the fact that they have all these ill-gotten dollars that they've created and they're fraudulently sitting on, and they think it gives them enormous power. And it does, as long as those dollars are still spendable, and as long as they're still desired and accepted in payment for goods and services around the world. But what happens if those dollars are suddenly not good anywhere? Like, America has boots on the ground, troops, boots on the ground in over 100 countries around the world. What happens when you can't pay your troops in a currency that they can spend? Those troops come home in a hurry, let me tell you. And your foreign interventions grind to a halt in a very, very serious and very, very rapid manner. And the game changes. And the game changes overnight. And if you don't believe me, check out the history books. Read about what happened in Germany in the 1920s. Read about what happened in Zimbabwe in recent years, where the money turned to Zool. And, and people who think it can't happen here, I'm going to suggest to you think again. And as it sinks into the rest of the world, how many U.S. dollars have been falsely created? And, this is not something that the rest of humanity is going to stand for, that these elitist scumbags have created this amount of money and have seized this much control. And the funny thing is, it's going to be the globalists themselves that'll bring it upon themselves, because they're going to realize that what they're really sitting on is a big pile of confetti, and not the almighty everlasting dollar that they think they have.
The relationship, you mentioned hyperinflation in the middle of that, and we had one guest, Steve W., who says, I'm very interested in the telltale signs of hyperinflation. And Rob, you just spelled out a scenario where things could suddenly, when there's a breaking awareness, things could happen very rapidly.
Donegan, look at what Bitcoin is doing in U.S. dollar terms. And I'm going to suggest to you, all that Bitcoin is doing is what gold and silver want to do and have been prevented from doing. So it's like if I drop a bucket of water and I prevent it from flowing into one place, it's going to flow to somewhere else. But in my view, the rapid, dramatic appreciation of the cryptocurrencies is an anti-dollar trade. It's people wishing to effectively diversify their holdings. People don't want the dollars. They're willing to take their chance on a virtual currency. And you will see other things that people view to be or perceive as things that will have value. You will start, and I mean we do see it. I mean, recently we saw a big major fine art auction where I believe it was a Rembrandt that was expected to bring $100 million for a copy. Well, it sold for over $500 million. You see, and the reason things like this can happen in the fine art market is because there are no derivatives for fine art. Fine art is very similar to Bitcoin or cryptocurrencies in the sense that there are no futures, there are no options on fine art. These and fine art prices have been going up dramatically. But if one's paying attention, one would notice, I think, that like real estate prices are at record highs around the world in almost every jurisdiction. Equity markets are at record highs in almost every jurisdiction. Cryptocurrencies are at record highs and going higher in an untold number of cryptocurrencies, some of which are probably frauds and will never amount to anything in terms of having utility going forward. And yet we've seen gold and silver absolutely nailed to the floor in nominal price terms, or dropping even some, with open interests on these crooked exchanges where we're supposed to have transparent price discovery, with open interest at record highs. I mean, it's so completely and utterly, in a very dark sense, laughable. It's brutal. And you know what? But the real issue is, despite the capping of the precious metals prices on these paper exchanges, they haven't diminished or lessened the desirability of physical precious metal at all. And if anything, physical precious metal is becoming more and more desirable as days pass, because people with dollars they wish to get rid of, view the physical precious metals as the most undervalued assets on the planet, and they are.
On that same line, there was a question here about how long can this go on, and I know that nobody knows the exact answer on that, but at least it's in the vein of what you were just describing, and saying year after year, financial collapses have been predicted for the last 7 years. Again, this year they said we'd have a global crash by the fall of 17. Realistically speaking, how long can they keep kicking the can down the road before it really happens? Do you think it will be a sudden collapse or a slow, steady burn that drags on for decades?
I don't believe we have decades. I don't believe we have years. I believe with where we are, we're in a very precarious position right now. My view on it is very likely. It may be weeks, it may be months, but I can smell it. I can smell it coming. Donegan, I'm looking at the rate of a cent in the cryptocurrency prices, and this is something that tells me it's close at hand.
How about this one from New World Forward? Why is the Bank for International Settlements aggressively increasing the use of gold swaps? Here's a report from GATA from last month. Last month, GATA consultant Robert Lambourne, who studies the gold activity of the Bank for International Settlements, reported that gold swaps undertaken by the BIS have exploded from 0 a year and a half ago to about 570 tons as of last month.
Gold swaps are used to mobilize the mobilize. Ostensibly, these gold swaps are supposed to represent physical gold that's in a vault somewhere. And what it's very likely mobilizing is paper IOUs that are in a vault somewhere, because in a lot of cases in the Western world, gold that is supposed to be in the vault has already been mobilized and is gone. And it's been replaced by an IOU, because in the central banking world, gold in the vault is counted on the same line as gold that has left the vault where an IOU has been put in its place. So when country, if country A ostensibly owns 1,000 tons of gold, and if they've leased 800 tons of it out, where it physically was moved out of the vault, an IOU was put in its place, they would still report that they have 1,000 tons of gold. Then if the BIS came calling and said, we'd like to borrow some of your gold, well, they might just end up borrowing some of that 800 tons that's already left the vault, that's already being represented by an IOU, and it then gets sold again to yet another unwilling dupe who believes, because he's got the word of a central bank or the BIS, that it's physical gold and it actually exists. And what I'm describing here is a classic Ponzi scheme. And this type of accounting is tolerated and in fact even encouraged in the central banking community. So anytime we see central banks churning up the swaps in the gold universe, it basically it's evidence that there's heavy hand of officialdom at work to suppress the gold price. Because these guys don't ever do anything to push the price of gold up. They only do things to cap its price or to push its price down. So what they try to do, I guess more than anything, is they try to make the market look like it's always flush with plenty of product, whether it is or not. And in the case of physical metal is becoming tougher and tougher and tougher to procure in large amounts, and people who are in that business know that very well. Regardless of what the paper price is telling you, it's becoming harder and harder and harder as days and weeks and years go by to procure physical precious metal in any kind of size. And that's just a reality.
If we have time for one more question, this is a big one, but you can just delve into it to any extent that you feel that you want to. And that's one, it's a topic that's come up with other guests of ours, but I'm not sure that we've ever touched on it here together. It's from I Am Sally Dog saying, with possibly millions of jobs in the U.S. alone likely to be lost due to robotics and AI in the coming decade. What do you see as the timeline for the introduction of a guaranteed income? What do you imagine the rollout process to be like? Funding sources, effect on PMs, commodities, other goods and services, wealth gap, innovation, societal stability, further deployment of high tech, etc.?
That's a difficult question to answer because, I'm inclined to answer the question with a question of my own. In that, if we're at a point where the dollar is going to lose its position due to the criminality of the people who've been managing it, and if a proposed guaranteed income were to be promised and were to actually come into being, my question is, if somebody's going to guarantee me that I'm going to make $600 a month guaranteed income, my question back is, what are those dollars going to buy me? I mean, today we all probably have a pretty good idea what $600 will buy in terms of at the grocery store or at a fast food outlet. But the real issue is when hyperinflations occur, the let's just say what your currency bought today can be dramatically different tomorrow or the next day. And a guaranteed commitment of a stipend of X amount of dollars per month, while it might sound like it's a livable amount or sort of a base amount today, in the presence of a hyperinflation, it might not get you a cup of coffee in a few days. So, I view any such plan to be highly problematic for that reason, because I do believe in our very near future, I see a hyperinflationary event coming, and I feel personally that that's just a matter of math. I don't really think there's any emotion involved in it. If you accept and actually believe the documentation of people with PhDs in economics using the government's own data and numbers, there is without a doubt no chance that this money wasn't created. So the amount of money that's in existence is dramatically different than what people believe. I mean, if we look at the St. Louis Fed, who keep the monetary aggregate data, for America, they tell us that there's the monetary base is like $4.5 trillion. Well, and people say, well, $4.5 trillion in an economy that's measured in terms of GDP of what 13 trillion ish, somewhere around there. That might make some sense. But if we then suddenly say, well, but the monetary base really isn't 4.5 trillion. The monetary base is actually 25.5 trillion. Well, that sort of changes the game. And it may be more than that, because you see, that's only evidence that's been produced from two divisions of government, the Department of Defense and HUD. And what if we were to do audits on another 8 branches of government and found out instead of 21 trillion in undocumented or unaccounted for money, we find out that the number is really 50 trillion. And this becomes a very, very, very big problem. And it becomes a very big problem in a big hurry. And it also becomes a very, very big problem for America as other countries around the world clue into this and realize the extent and the seriousness of just how bad this has all been managed, and just how much criminal activity has occurred. because you know what? The fiat money game is a game of confidence, and when people realize that the games have been played, they lose confidence in a hurry, and it's a loss of confidence in fiat money that produces hyperinflations, and when they come on very quickly, and history is full of examples, hundreds of them, where just that has happened.
Yeah, that's an interesting discussion because we've had a lot of commentators saying that, for example, the spike in cryptocurrencies is, as you mentioned, a example of loss of confidence in the U.S. dollar and people trading that for something that they see as a better, more reliable, more transparent contender. Others have said, it's just a momentum play. Most people don't know anything about it. They're just jumping on the bandwagon of what they heard about, and their friends think it's cool, and they're talking about it at Thanksgiving, so they just piling on to something that's going up just because there's got to be a greater fool later. And that maybe there's evidence of both. Maybe that's a combination of both factors there. But you pointed out that this is happening in real estate, it's happening in equities, it's happening all over, and it can't continue at that exponential increase. Excellent, sir. Thank you very much. Boy, that was like 12 major topics there. That was very meaty.
Yeah, you know what? That's just what's going on.
That's a lot of stuff. I mean, yeah, like you were saying, when people say, how long can this keep going on? And you just talk about the frequency of these things that nobody would have believed if you'd have told them, 10 or 20 years ago, this is going to happen. They'd say, no, that's not going to happen.
Well, you know what? I look at what's going on in crypto land as a bit of a dipstick, like in another 3 months, if cryptocurrencies, look, we began the year, the crypto market had a market cap of around 17 billion. So we've gone from 17 billion in January to 359 billion now. So, okay, and people say, well, 359 billion still in the grand scheme of things isn't that big. Well, okay. So what happens if it's a trillion by February? And people might say, well, it's just a trillion. You're right. When you're right. When people have stolen 21 trillion, 1 trillion doesn't look like that much.
A measly trillion.
Okay, but what happens when the guys that are sitting on the stolen 21 trillion start to get nervous and they think, you know what? Like, this ain't the right place to be. Then what happens? And they say, we better buy some gold. We better buy some cryptos. Well, listen to a guy like John McAfee. Earlier this year, McAfee said he could see Bitcoin going to $500,000. You know what? Yesterday, he said I'm changing my forecast. I now say Bitcoin goes to $1 million by 2020 instead of $500,000. Well, that's 2 years away. He says now $1 million a Bitcoin in 2 years. And you know what, Dunnigan? If he's only half right, Bitcoin's going up a lot. Okay? But you know what? At some point, I'll just tell you, at some point, physical precious metals have a lot of catching up to do. And at some point, this price suppression in precious metals will end because the people that are controlling them are going to lose their power by hook or by crook. The dollars that they're using to control everything in the world are going to lose their value, which is going to mean they can't control the price anymore. And once they can't control the price, and once precious metals become cash and carry, I truly believe you'll see gold probably trade easily 1-for-1 or maybe even higher than Bitcoin. And that'll be regardless of where Bitcoin is. If Bitcoin's at 50,000 or 100,000, I can see gold being worth that too, or more.
It might have been Cliff High that said something like, he said about a 50-50 chance, this is about 6 months ago, 50-50 chance that Bitcoin either goes to zero or goes to infinite. Because as you're saying, it depends how you're measuring these, if that's hyperinflation.
Okay, but the reality is in a hyperinflation, things that are perceived to be of value don't go to zero. They go to infinity. And we're going to hyperinflate. Because you know what? Too much money's been created for us not to hyperinflate. A deflationary collapse means cash becomes more valuable. And when people can fraudulently create or produce 21 trillion extra US dollar units, their value isn't going up. They're going to zero.
Rob, before we would let you go, do you have any final thoughts for our viewers and how they can find out your work and more of your writing online?
Well, you can catch me on the web at kirbyanalytics.com. And I guess in my closing words, I'm still a huge advocate of ownership of physical precious metal. And I think anybody who would sell their physical precious metal and moving their money all into cryptocurrencies has probably got the wrong idea.
Well, Rob Kirby, founder and host of KirbyAnalytics.com, frequent guest and highly appreciated by our audience here in Reluctant Preppers. Thank you once again for joining us, as always.
Pleasure being with you.